Tesla stock just experienced a massive plunge this month, losing over 30% of its value over just a span of 14 days. The stock has been under a heavy pressure due to the concerns regarding the demand for electric vehicles in the face of a slowing economy, which is certainly reflected in its share price. Tesla stock is down 70% year to date, yet some analysts remain positive on the company moving forward into 2023. Is Tesla stock primed to bounce back, and should you invest in Tesla's shares while it's at a historic low? So, what happened? Earlier this week, rumors arose that the electric vehicle manufacturer was reducing Model Y manufacturing at its Shanghai factory in China. Although whether such rumors are true, Tesla is still developing rapidly in a difficult environment. Tesla's recent Q3 report indicated that sales have increased by 55% year-on-year, while their free cash flow has more than doubled. Despite a recessionary climate in China and Europe, management believes the firm is on track for a good fourth quarter. Even though electric car sales in the sector are likely to slow, Morgan Stanley analyst Adam Jonas thinks Tesla will outperform expectations in the short term. Recently, PepsiCo received its first long-haul vehicle from the firm earlier this week. Tesla is also planning its Texas facility to begin production of the Cybertruck next year. Factoring in the excellent Q3 results, Tesla's ability to produce consistent deliveries and sales growth within these turbulent times demonstrates the strength of its brand. Analysts predict that the company's full-year sales will expand by 55% in 2022, followed by another 39% growth in the following year. Despite its enormous brand power, Tesla faces increasing difficulties in the short future, including declining demand in China, which may compel the firm to decrease selling prices on some models. However, the bear market is the ideal time for individuals on the fence about Tesla's high valuation to add shares to their portfolio. Here are 3 pointers that Tesla's incredible run is far from finished. Number 1. The Cybertruck is on its way. Tesla's CEO Elon Musk made a big deal about the company's first truck in 2019. The business intended to launch its first pickup truck at an extremely low cost of less than $40,000. Due to manufacturing delays and rising inflation pushing up the cost of components and labor, it is far more likely to be more expensive than initially anticipated. Regardless, it seems Tesla will attempt to price the car to compete with the Ford F-150, which was the best-selling vehicle in the United States of last year. The F-150 is Ford's most popular car, but Tesla has the potential to overtake the industry leader. Cybertruck is the most anticipated electric vehicle introduction to date, with a projected 3 million reservations already made. For comparison, it is approximately 10 times the entire number of deliveries made by Tesla in the third quarter alone, indicating a significant potential sales driver. Americans seem to like trucks, so it's hardly any surprise that the Cybertruck will become Tesla's best-selling car. During the third quarter earnings conference, Musk said, "We're in the last lap of the Cybertruck, with manufacturing set to begin in the middle of 2023. Second is that Tesla's earnings are quickly increasing. Tesla not only has a significant forthcoming growth catalyst in Cybertruck, but investors can also take confidence in the fact that Tesla is a successful electric car manufacturer. Morgan Stanley analyst Adam Jonas further said that Tesla is the only name we cover that produces a profit on the sale of EVs. Tesla achieved a net profit of $8.9 billion on $57 billion in sales during the first 3 quarters of 2022. This is far better than Ford's net loss of $3.3 billion on the $114 billion in sales. Tesla has a better track record of creating profitable growth than other automakers, which is why the stock has risen. Tesla is already producing 10 times the profit it did 5 years ago, whilst Ford and General Motors have failed to achieve an appropriate profit margin. As Ford and GM ramp up their EV operations to compete, Tesla's profitability provides it a significant financial edge in developing a better product and providing stronger customer service. And finally, at number 3, Tesla is the market leader in battery electric automobiles. Tesla announced a record of 343,830 deliveries in the third quarter, up to 42% from the previous year, although the total did fall short of Wall Street's average forecast. Some investors perceive the shortage as a demand issue, although management claims that the underlying reason was unexpected constraints on the export logistical capacity. According to CFO Zachary Kirkhorn, the business has begun to smooth regional builds throughout the quarter in order to eliminate end-of-quarter bottlenecks. Despite this setback, Tesla maintained an 18.5% market share in battery electric vehicle sales for the first 3 quarters of the year, with BYD behind at 11.9%. Even better, Tesla reported strong financial performance in the third quarter. Revenue rose 56% to $21.5 billion, while free cash flow surged 148% to $3.3 billion as the business maintained its industry-leading operating margin. The accomplishment is the result of a never-ending quest for production efficiency. For example, Tesla's proprietary battery cell technology allows it to pay less per kilowatt hour to produce battery packs, the most expensive component of an electric vehicle, which is extremely impressive comparing it to other automakers. Analysts at Cairn Energy Research Advisors predict that cost advantage will last until the end of the decade. However, Tesla did show its ability to innovate in other areas, like its direct-to-consumer sales approach and its single-piece casting procedures. So the question is, should you buy Tesla stock? Investors have many reasons to be optimistic about Tesla's future. The firm is on track to expand output by 50% throughout 2023 while delivering its first semis and Cybertrucks in the next 2 years. The firm also intends to launch a robotaxi in 2024. In addition, the business intends to make their self-driving beta software accessible to all North American customers by the end of 2023. This is especially remarkable given the management's expectation that FSD technology would eventually become the most important source of profitability. There are reasons why it's an excellent time to buy Tesla stock. It is now selling at a discount to where it will most likely trade when the market improves. Overall, we give Tesla stock a strong buy rating for the long term and a buy rating for the short to mid-term. Following the 2022 stock slump, the stock market is in a prime position for a massive rebound heading into 2023. Check out our video on the top 5 most promising stocks to buy this year. Thank you for watching, and please like and subscribe for more videos just like this one.